Hello and welcome to the Wire Talks. I'm Sidharth Bhatia.
The release of the Hindenberg report on the Adani Group 2 days before its public issue set off a selling spree not just in the Adani companies but also in the Indian stock markets in general. Gautam Adani cancelled the public issue even though it was apparently fully subscribed, which raised further questions, and the free fall in the group company shares continues. Adani became not just a stock market issue but also a political one. Opposition politicians asked why SEBI, the regulatory institution, had not looked into the group's companies. And suddenly, short selling was also in the news. Critics said short selling was not good for the markets, despite it being an old legal practice, and was Hindenburg being unethical, releasing a report that preceded its short selling, on which presumably it made a lot of profit. To clarify this, we reached out to Vijay, a well-known investment banker who has been a commentator on the markets with a 50-year record. An IIT graduate, he has worked with several banks, Indian and multinational, after which he started his own boutique investment bank. Vijay was associated with the business channel CNBC as a stock market expert and also associated with the BJP as its national spokesperson on economic affairs. Vijay, welcome to the Wire Talks.
Thank you. Thank you for having me here.
Before we move further, a simple question. Is short selling an unethical activity?
Not at all. So that short selling is a legitimate market activity. Everybody does it at some point in time. I've done a lot of it myself. But it's a specialized, it's not for weak hearts or innocent kids who are dabbling in the market. The reason is, what is short selling? In short selling, a short seller is a person, an investor, who is selling shares that he doesn't have, hoping with the analysis he has made that those same shares will fall considerably over time and he will buy those shares and make money. Let me give you a very simple example. Let me use Adani, which is right now the Khichdi of the month, right? Okay. Adani shares about a year ago were at 4,000 rupees. Many people would have felt that the Adani shares are very highly priced because if you use conventional matrices like earnings per share, price earnings ratio, market cap to sales multiple, whatever standards, the peer group comparison, the shares are very highly priced. So you take the view, hey, listen, there's an opportunity. Let me sell these shares. These shares are bound to fall at some time. The problem is, as a short seller, I don't have the shares. And in the market, when you sell the shares, after 2 days, you have to deliver the shares. So what you do is, you go and borrow the shares. You tell your broker, listen, I want to short Adani Enterprises about 5 crores. Can you arrange 5 crores of shares for me? He'll do it. Because in the market, this mechanism operates very well for large stocks. But he says, sir, Mr. Vijay, it will cost you about 12% per month as interest on the shares you borrow. So I said, fair enough. I hope to make bigger gains. So I borrow 5. I have a proper agreement with the broker, blessed by the exchange, and it's very prim and proper. Then I go into the market and sell 5 crores of shares. Some Johnny, God bless him, buys these shares at 4,000 rupees. Then I'm sitting. Then people realize Adani is not such a great stock to be valued at 4,000 rupees. And the share, as it happened, came down to 1,700 rupees within 1 year. I made a bond, right? So what do? I go into the market and buy back those shares. When I buy back those shares, I invested 5 crores to buy Adani shares. Now I'm paying only 1.8 crores. So I squared my transaction and I made 3.2 crores profit.
But it's a risky proposition, no?
It's a very risky proposition. And Siddharth, I'll tell you why. Because when you are a long buyer rather than a short seller, your loss is confined to your investment, right? Let's say you bought a share for 100 rupees. Let's say you bought 1,000 shares for 100 rupees. You have invested how much? 10,000 rupees. That's your loss. Let's say that share goes to zero. You've lost 10,000. But in the case of this Adani, what I said, the damn share from 4,000, it might go to 10,000. Your loss is unlimited. There's no limit to your loss. That's why short selling is to be done by people with deep pockets and with good understanding. Now, short selling is used for two reasons. One is for speculation, which I just now said. Short selling for speculation means you buy a stock which, based on your analysis, is bound to go down. You borrow the stock, you short sell it, and then buy it back and make a good profit. The second is hedging. People like us who manage large portfolios use short selling for hedging. What is that? Let's say I've got 10 crores worth of Infosys stock. Okay, I'm now getting a bit nervous about Infosys. I find that Google is falling, Microsoft is falling, and IT sector is having layoffs and all that. So I want to be a bit careful. On the other hand, I have held this Infosys stock for a long time, and I don't want to sell the Infosys stock. So I build what's called a short position in Infosys, doing the same thing which I said. Then I hedge myself. So what we call is short selling is used by professional investors for speculation and for hedging purposes. Hedging being an insurance you take already against an existing. But going back to your first question, short selling is pretty legitimate. It happens all the time, but it has to be done very carefully. And I would suggest by very knowledgeable people with fairly deep pockets.
Yeah, PN, there have been famous past instances of mega short selling, for instance, during the time of Harshad Mehta in the 90s, early 90s.
Yes.
So at that time, there was this talk that the short sellers had actually exposed the big bull. And this time there is a lot of criticism of the short seller. It's a very strange situation.
Yeah, at that time, the supposed villain was Harshad Mehta. And it was said that he had, through speculation and market manipulation, he had taken some of his favorite stocks like ACC and Apollo Tires very high. So a group of short sellers got together and hammered the stock down. Their intention was to bankrupt Harshad Mehta. So the wisdom of that time was that being a crook, if you do anything to bring down the crook, you are a virtuous person. I think it is not wise to make judgments like that. It is, as a market participant, I can only say short selling is a very good thing, if you ask me, because it's a governor. In fact, many people will say when the markets are very down. I'll tell you an example, Sidharth. When the markets were very down in 2008 and all that, who brought the market up? Because you and I were very scared to buy the market. Everywhere there was Lehman crisis and this crisis, Merrill Lynch crisis. It is a short seller. Because the short sellers said, "Mera pet bhar gaya." And heavily, if you see the data of 2008, March, April, you'll find for 1 month, the buying was only done by short sellers. Because they felt we have made our killing, markets can't go below this, and they went up. Then everybody was praising the short sellers. The market found a bottom because of the short sellers. So, short selling is a technique. It's I would say, a market equalization technique.
But now the short seller is a villain.
Yes, the Hindenberg report has made short selling look like a bad thing or a villain. But then, that's life. People talk about things which they don't really understand. Yeah. So I think, that's what it is. You and I know it, yeah.
Okay, let's come to the Hindenburg report. Do you think that Hindenburg's open admission that it is a short seller, is there a conflict of interest?
Not at all. In fact, most short sellers try to conceal their identity. To be honest, in the market, a buyer also conceals his identity because he doesn't want the market to go against him. A short seller also wants to conceal his identity. And I was surprised that Hindenburg went out and said, "Hey guys, from tomorrow morning, I'm going to short sell Adani." If I was shorting it, I wouldn't be saying it. So it is, I don't know, maybe that's their tactic or the markets in which they operate. You see, they don't operate in the Indian market. They short sold derivatives of the Adani stock. They didn't short sell Adani stock in India because they don't trade in India. So maybe those markets where if you're doing major short selling, it's possible that you may have to inform the exchange of that fact. I'm not very clear, but it's rather unusual for them to declare that.
What exactly has Hindenburg done? People are still confused.
No, Hindenburg, from whatever, I don't know them personally, Hindenburg is a 5-year-old research firm, and their mission is where they believe there are companies whose shares are highly inflated, and are not worth anywhere near that price. And this inflation is happening due to false accounting being done internally and market manipulation, which both you'll agree are highly illegal things, false reporting and market manipulation. They research those companies. They take 1 or 2 years to research those companies and bring out fairly damning reports. This is their 5th report they've done. And to be honest, wherever they have done these reports in post-mortem, what they have said has come out right. In fact, the last one they did of a Chinese company, it ended being delisted from the Nasdaq, and that company has gone into insolvency. So obviously, their research so far has been good.
What do you think the weakness they would have found in the Adani group?
No, that report, if you read it, it's very, very simple. They are pointing out 3 or 4 things. Just to recap, now, of course, it's now most people know it. On the financial side, they are pointing out 2 major weaknesses. One thing they're saying is this company has borrowed too much money. What you call the debt equity ratio, we call it, the level of equity or owners' funds to the debt, it is very high by any standard, which makes this company a very weak company, they're saying. They're also pointing out that a lot of the shares that the Adanis themselves have are pledged to banks, and they've taken more money, which means that doesn't really qualify as equity. Let's say, for example, there's a company with 100 rupees, out of which 30 rupees is equity and 70 rupees is debt. So the debt equity is 2:2.33, which is quite high. Normal ratio is 1:1. Now, in that 30 rupees also, if you have borrowed 25 rupees against that from banks, then your skin in the game is only 5 rupees, isn't it? So they are pointing out this company, the Adanis have very little skin in the game, and it's all borrowed money that's operating. Second point they're making is something called the current ratio. Current ratio is the liquidity the company has. They're using various parameters. They're showing that the current ratio has to be normally 1.5, 1.6 for a good company. They're saying it's less than 1. So it's saying this company will have huge liquidity problems going forward. This is the financial aspect. Second, they're saying the accounting, the statutory auditor is a very small firm.
Correct.
Being so, it is likely to be subject to pulls and pressures of the big people in that area, the Adanis. And it's no doubt true. I serve on several boards. It's no doubt true that when a company reaches a certain level, the promoters themselves or the lenders insist on a large firm with international exposure. And Adanis have a lot of international exposure, currency exposure, translation exposure, should audit the books. The idea being is such firms will not be subject to any pressure, will be impartial, will be knowledgeable. But that didn't happen, and Hindenburg pointed that out. And another important point Hindenburg made is a slightly technical point. In India, Sidharth, the company to be listed, at least listed means traded on the stock exchange, at least 25% of the shares should be in public hands, and promoters cannot have more than 75%. In Adani's case, out of that 25%, Hindenburg is saying that a large percentage is held by overseas entities whose only investment is in Adani shares. So they're saying the effective liquidity in the stock is very, very little, which is why MSCI is seriously thinking of moving them out of the index, because MSCI is a liquidity-based index. So their point is, since there is hardly any liquidity, Mr. Adani is able to manipulate his share prices very easily. This sum substance is the sort of points or allegations, we like to call them, that Hindenburg has made in their report.
Now, these technical facts must have been known to a lot of people in India, no?
I don't know a lot of people, but the people in the industry usually knew it. Yeah. I don't know. Surely the financial aspects which I said would be known to most people. I'd say most of the lenders, at least, because lenders look at these things with a toothpick. the liquidity aspect of it, people like me knew because we were in the market, we analyzed companies and so on. The normal investor, I don't know how much is the free float and how much is the free public shares controlled by entities. That's something which I would say is not common knowledge, but people who are deep into the markets would know. Most portfolio managers, most mutual funds.
Surely there was a case for SEBI to look at it at least.
Yes. You see, let's be honest. Market manipulation goes on all the time.
No, please repeat that.
Market manipulation goes on all the time. Okay, in all markets because it's greed, right? And regulators, and I should say, the Indian SEBI is very well positioned. I would say I've been in the market for 50 years, and over time they have built up very, very good surveillance software. SEBI and National Stock Exchange, where it is very much within their realm to identify market manipulation. Meaning, how do you manipulate a share? You do circular trading. You have 3-4 of your own companies which keep on trading among themselves. Okay, and it's like a spiral. You take it up. You have to be very smart about it, but it's not rocket science. It's done. So, if SEBI were to conduct an inquiry, it will not take them more than 4 or 5 working days to establish whether there was market manipulation or not.
So why didn't they?
Well, I think they're going to do it, right?
A bit too late, no?
Well, better late than never. Yeah.
So are you suggesting that there is prima facie reason to look at, I'm framing this very, very carefully, prima facie reason to look at something even before the Hindenburg report?
I don't have enough evidence to comment about that because it's quite a complicated question in the sense that if you look at the movement of the Adani stock on the NSE, it was around this level, 1,800,000 last early March. Then it went up to 4,000.
Correct.
In early Jan. So that's more than a double the rise. But it's happened over 9 months. So, yeah, it's difficult to say whether there was enough red signals for SEBI to suo motu launch an inquiry.
But lenders at least should have had some red flags.
Yeah, lenders, I think, but lenders were happy because they were getting their repayments. It's a good question. I've never thought about it that way. Because I think, to be honest, lenders should have been a bit more on the
vigilant.
Because the financials are not good in Adani, sure. And they were acquiring, they acquired ACC Cement, they acquired NDTV, they were bidding for DB Power, and they were bidding for 50 airports. I mean, they were a very aggressive growth path. If I were one of the lenders, I would have raised my hand and say, hey, listen, let's have a chat. This can't go on. I would have done that, but I don't know about that. On the movement, I would say probably the share movement the last few days before the issue, the issue was just pulled off,
Yes.
The few days before the issue, the share really went up. Whether that could have called for a quick inquiry, I wouldn't know, but I would need more data for that.
Well, I understand your constraints, but there was, the papers here never wrote about Adani in any kind of investigative way. SEBI, which you said can really look at it in 4 or 5 days, did not do anything. Lenders were happy to lend, you're saying. Public float was low. All these factors together is what Hindenburg spent a year and a half putting together. And therefore, there was enough material in the public domain. And yet nothing happened.
Well, it's difficult. What is public domain? Different constituencies to public domain. There are bankers and lenders. They are not bothered too much about the share price situation. They're looking at the internal financials. So I feel they could have done something. To be honest, I don't think there was enough, let me say, hawa to, at least I'm not so close to this transaction, for SEBI to just send us this thing, we are investigating Adani's share price movement.
So do you think Hindenburg, sitting far away, a small organization of some few people, had none of the constraints that Indian institutions would have had, including trading houses.
Well, this financial market has the lending side and the capital market side, which in India they're pretty well insulated. A company can be, Adani in his replies has said, "I've been getting very good credit rating from the raters, and they are satisfied with my financial performance." So that might have had a bearing on the lenders. On the equity side, which is where SEBI comes in, your point is whether the run-up of the shares over the last 1 year justified investigation by SEBI, even if there was no complaint or anything like that. That's a moot point, actually. That's a moot point. But your point is right. Hindenburg put it all together nicely. There were, people like Sucheta Dalal and others like that. I've been writing about the Adani shares. Even one or two of the MPs had been highlighting this. So that way there was enough people like us were so much in this line. We all knew that these types of people had been raising very major concerns. But let us put it, it didn't happen. It didn't happen. And investors have lost money. People went in at higher level.
Yes, that is true. And the way the shares have been falling, I was just seeing the table of shares that have fallen in the Adani Green. It has fallen by 67%.
Yeah.
Some others too. This is not the kind of fall that can be recovered soon or swiftly.
For a very, very long time.
So obviously a lot of people are going to lose money.
Yeah, they've lost money. Why are you going to lose money? They've lost money. Yes. That's the sad thing, in all this. The banks, of course, some people have been saying 2 lakh crore exposure. The Adani companies default and the Indian banking system, 2 lakh crores is not a small amount. So would have to take huge haircuts. And I don't know that type of thing is going to happen because as Adani companies have good assets, some of their port assets and power.
So anyway, we are not going too much into Adani, though there is word that there might be asset sales.
Yeah. But our excitement was about the whole concept of short selling and how to make money out of it.
The Adani group called it an attack on India and invoked nationalism. There was a flag flying and all that kind of thing. Is it really an attack on India?
Oh, not really. It's not at all, I think. This type of, Dev Barua, I remember in the late 60s, early 70s, the Congress president used to say, Indira is India, is Indira. When these things come, it's not good for Adani. Nobody thinks that. And India has gone a long way. If you look at the Indian bourses over the last 30 days, we had jet and etc. The Adani, we have just shrugged off the Adani imbroglio. It's not had the Adani stock is not even on the Sensex. Adani stock has about 1 or 2% weightage in the Nifty. So the big point there is that for Adani to think that the entire nation will sort of get concerned, will think of this, is, to my mind, childish. It's very childish. And I'm happy that people just ignored it, But this type of rhetoric is not expected from a businessman. I think, you see, when a businessman is in trouble, and many businessmen are in trouble, business is all about risks and setbacks and all that. You handle it professionally. You don't invoke rhetoric. You call investor conferences, try to explain, and it's like that. I would have expected him to do that, but he didn't do, which is a bit unfortunate.
You mentioned a little while ago the haircuts. LIC says they are well within control.
I really don't trust that enough data. You see, some of these companies now, LIC, for example, they might have gotten at the basement at 10 rupees per share. Right in the beginning with that, because Adani has been around for a long time. So let's say half their portfolio is 10 rupees or 20 rupees, and half their portfolio is at 3,000 rupees. What could be very interesting for any sharp mind to see is in the last 2 months, if the institutions have been propping up the share prior to the issue. That would be interesting. Whether they were buying at that 3,000, 3,500 levels. That anybody can do it. They can look at the NSE data. Not anybody can do it. Somebody with some.
And finally, how can an Indian company, and we are talking only of Indian companies, protect itself against such an attack, such a situation, such a exposure? How can they do it?
Well, by having a sound financial integrity, let me call it that. If a company wants to grow, there are some very, very basic principles. You should borrow within limits. Your liquidity should always be good. That means you must have 3 to 4 months cash in hand to meet your liability. They're all cardinal principles of finance. If in your desire to grow, you throw to the winds all those cardinal principles and start rotating money or start raising your share price, then you have to pay for it. So my only advice to Indian companies is, see, business is all about risk. Why do you want, there are market risk, regulatory risk, etc. Why do you want to add financial risk to it? Why don't you grow a bit less, why do you want to buy 50 airports? Why don't you try to manage the airports that you already have? So if you able to have financial prudence, which is what many good Indian companies do, India has some stellar companies. So if you try to, with some little equity, you want to blow up and, you start acquiring this, acquiring that. In fact, people like us question the ACC acquisition, the biggest cement company, we said, why? You are into power and ports, etc. Why do you want to get into? But then this is not good, Things will catch up with you. I'm telling you, it's very brutal when it catches up with you.
Just one last question, PN.
Yeah, Sidharth, tell me.
Was there a factor X at play in Adani's growth?
I've been asked this question several times. I don't think so.
And that factor X, if you want, I will fully qualify it because I'm not hiding behind anything. And that is political influence.
I don't think so, to be honest. You see, Adani has come up very fast. He's a Gujarati businessman. And Prime Minister, when he had a stint in Gujarat to develop his state, had excellent relationship with all the all the entrepreneurs of the state. So it's obvious that people would say that Mr. Adani enjoyed the patronage of people. But to be honest, the projects which he has undertaken are very difficult. Mundra Port and power transmission, they are very difficult projects. So to my mind, at least, forget my BJP background, forget my BJP leanings, etc. To my mind, at least, there is not enough evidence to say that the Adani growth is attributable to factor X as of now.
But on the other hand, you know that you don't get 6 airports just like that.
No, for that, I know so many Indian businessmen. I sit on
with no background.
Yes, so I sit on the board of 10 large Indian companies. I tell you, what Adani has, which other Indian businessmen, he has a lot of spunk. I tell you, that guy, he bets the shop. I've looked at these airports, I've looked at these with some other business friends of mine. They say these airports and all won't make any money. This Udan and all a disaster. I don't know why that guy is going. But, many of his investments, they question the financial viability of such projects. So I would rather say that he is, in a way, rushing in where angels fear to tread. Listen, why would you buy airports in some Shimoga and some Dibrugarh? It's the economics of it don't understand. So what he has got, but again, nobody has done enough research, Sidharth, on these things. I'm surprised there's no Hindenburg in India. I want people to go, then maza aata. Right now we are talking a little bit in the realm of speculation.
Maybe you could start one.
I'm too old for that.
Well, on that note, really you have explained the whole thing, with naturally without sufficient data. But I may still say, as somebody who follows business, but not deeply entrenched in the financial markets, that I think even lenders and others played fast and loose. And there were occasions that they could have really raised red flags. But you have pointed that out. So thank you, P.N. Vijay, veteran of the markets and an investment banker for the last so many years. Thank you very much.
Thanks, Sidharth. I've enjoyed talking to you today, and keep in touch.
I shall. You can check out this podcast and other interesting ones on the Wire website, the IVM podcast website, app, or wherever else that you get your podcasts. Goodbye from me, Sidharth Bhatia, and the Wire Talks podcast team.